Hello, this is Manesh Patel from EII Capital Group. Today is June 13th, 2010. We're going to be going for the Ichimoku analysis for the U.S. markets. Just like normal, we're going to go for the disclaimer at the very beginning. My PowerPoint starts working. There we go. This disclaimer is just telling you basically this is for educational purpose only. We're not making any recommendations for any trades at all. This is solely for learning, for people to learn how to use Ichimoku to analyze the markets and so forth. All the charts are either in Thinkorswim or TradeStation. Okay. And lastly, here's my contact details and information. If you want to learn more about Ichimoku or anything else, you could access all our resources at eiicapital.com right here, and you have access to everything there. There is a place where you could download the free 2-hour Ichimoku video if you don't know what Ichimoku is already. Okay, so let's go straight into the charts. Today I'm actually going to show you a chart, or I'm going to show you both the weekly and the daily on the same screen. We're doing this so that you can kind of see both of them at the same time, what's going on. Again, last video, I think we went for the futures. We like to go for the futures to represent the U.S. markets. Reason why is they represent what's going on very accurately. The indexes such as SPX and so forth, they're not 24 hours. They pretty much open only with the U.S. market. So you really don't see what happens after hours or anything like that. Whereas the ES kind of represents everything that's going out there. A lot of institutions pretty much use the S&P mini futures as a gauge of what's going on with the markets. So we're going to do that same thing here. If you look to your left, this is the weekly chart. If you look to the right, this is the daily chart. This is the E-mini S&P futures. And we'll zoom in this in just a moment. Okay, but if you quickly look at this right now, the sentiment is bullish. Reason why it's above the cloud. Okay, that is very, very clear. However, there's a lot of conflict. One of the major conflicts is that price is not above the Cajuns and Tinkinson at all. So you got a little barrier here. This is a major, major resistance that the S&P has to overcome in order for it to even go into a bullish scenario at all for us. So the sentiment is bullish, but we're not looking at any bullish trades until we at least get above 1125. At that point, we'll look at the charts, and then we'll start looking at all the other indicators and see where we stand. But that's a major, major indicator. So you notice on a weekly basis, twice now we've gotten very close to the bottom of the top of the cloud. We haven't quite got there, but we're just kind of surfacing right on top of this cloud. So you really don't know what's going on. The Chicago is actually bearish too, so your momentum's bearish. So really all this is telling me is that we're basically consolidating right now. If you look at the low part of the consolidation pattern, it is pretty much right here. Okay, and this is on a weekly basis. So you're going from basically 1125 to about 1035 right now on a weekly time frame. Of course, we've gone out of that range a couple of once, but you know, right now we're back into that range. So this is a major, major resistance value right there. This is a major support value right here. Let's zoom in now on a daily basis and see what's going on. If you look at the daily charts, it's conforming exactly what we said before. We are consolidating. Okay, and if we draw price line charts here, just kind of show you the channels. On a daily basis, this kind of matches up to what we saw earlier. Okay, so we could also do it here. So this kind of shows exactly what's going on. The key here is on a daily basis, we're not going to know anything that's going on until we get past this point right here, 1105. So on a daily, this is actually sitting there ranging. Let me delete this guy right here. Ranging from 1105 to 1136, pretty much what we found on a weekly time frame. So we really can't sit there and look at any trades right now until we see what's going on. But the daily is basically bearish for the E-mini S&P futures. Okay, now I'm going to unshrink this, and what we're going to do is we're going to look at the NASDAQ futures. The reason why we're looking at NASDAQ futures is because technology did lead the way, and it was the early indicator of the markets going bullish. Okay, so we're going to look back at NASDAQ, and you're going to look at the weekly charts. And if you look at the weekly charts, you could see that the NASDAQ is very closer to the Cajuns and Tinkinson than the S&P was. So if you look at the NASDAQ, it's not too far away from actually turning bullish. Okay, the key barrier here is going to be 1142 right here. Okay, and we'll mark that right now. So you got to see what happens at that point. Okay, and if you look in the weekly time frame, you kind of have the Cajun pointing up, but it'll settle down. So you're probably looking at about right about here. Can't even draw it today. Actually, it's not even drawing. Right there, 1168. So really, you can't really do anything right now until you break the 1868, and really until you break 1894, which is the top of this cloud right here, 94, 93. Really, there's no trade right now for the Nasdaq at all. Notice that this break of the Kumo cloud on the daily matches up to the Kijinsen-Tinkinsen on the weekly. So really, there's no scenario right now that you could sit there and look at there where you can sit there and trade. Reason why is the dailies are basically showing you that the weekly charts are showing you that both the Nasdaq and the S&P futures are bullish, but the dailies are bearish. So you've got conflict among time frames, and at this point, basically, it's going to cause some major consolidation. Since the volatility is very, very high, let's look at the VIX. Since the volatility is very, very high, this consolidation is going to be huge. So everyone needs to be very, very cautious. If you look at the VIX, basically it's in the cloud, so we're in a consolidation pattern. We're not bullish or bearish, but notice how it has yet to penetrate the top of the cloud on the VIX. This is very, very good. Reason why is, remember, it's an inverse relationship to the market. So the more bullish the VIX is, the more bearish the markets are. So if you look at it, basically it seems like this is what a trend down, a pullback, bounced off the top of the cloud, and now there's a possibility of it going down. So which should conform to the weekly trend on both the S&P and the Nasdaq futures. Okay. If you guys have any questions, please, as I mentioned before, please sit there and send information here. You could go to EI Capital. If you have any questions, you could post them on a discussion forum, and my staff and myself will sit there and respond to them. Thank you.